Did somebody say short squeeze? Yes, guys, Wall Street and retail traders are at it again, piling into stocks such as Broadcom and, of course, Tesla right now. But what does the options market tell us about the ceiling for these particular stocks? In today's video, we take a look at that along with the Santa rally. Are we starting to see signs of something very promising for 2025? Or, with the head and shoulders forming on Nvidia, should we be terrified? Well, in today's video, we'll break down the Santa rally, the data that you need to know, and of course, where the alt season is about to start. Because guess what? 4100 is coming for Ethereum, and this zone really matters. Stocks, commodities, and cryptos, let's cover them all right now together. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we need to talk about the good, the bad, and the ugly when it comes to markets, because some things are doing very well and others are doing quite poorly. More importantly though, certain stocks that have been falling behind may still have more upside in 2025. So let's take a look firstly at the Santa rally. What if we were to buy the market 3 trading days before Christmas, this is the NASDAQ, and then sell it 8 days later? Well, as it turns out, since 1987, if you'd actually followed this strategy, you would have a 28-5 win rate. That's not too bad. That's better than most people's trading odds. So yeah, something interesting to keep in mind as we continue to see here a big movement in semiconductor and tech stocks. Now, does that mean that everything is fantastic into 2025? Well, as we've talked about, we're feeling pretty bullish, at least into inauguration. Then we might see a 10% sell-off somewhere in the first quarter of the year. And of course, we usually expect the back end of the year to look a little bit different. Second halves tend to be worse than the first halves in first presidential Republican cycles. And as we have heard recently, Trump has said there may be a little bit of pain to come in a recent interview with Cramer. Now, as we know, whenever you're talking about Cramer, it could be completely backwards. But anyway, you may want to check that out. Election years and S&P 500 seasonality. Look, we know this. We've been talking about it for a while. This is generally the week where we tend to see markets rally through, and it usually kind of leads into the end of the year. It's what they call the Santa rally. Some people believe it starts after Christmas and goes into the first few days of January. Some people believe it starts around this period. Either way, you can see the stats. They're clearly bullish towards the markets, and certainly the NASDAQ is leading. So we have to ask ourselves the question, is it okay for the NASDAQ to lead? Are we okay with a market that is literally concentrated into only a few stocks? The Mag 7 in particular, absolutely going wild over the last week and a bit. Well, as we always know, whenever we're in a concentrated market, we really have to ask ourselves one question. And that question is going to be, for all of us, are we heading for a lost decade? The big reason here is going to be leveraged ETFs. Everybody has been buying the S&P 500 NASDAQ, and I would basically guess that most of you have some form of core portfolio, what we call core satellite, where you have some index positions. Do you have an index position? Let us know in your long-term portfolio in the comments down below. But a lot of people have been buying leverage, especially post-election. And what we're noticing, and we will have a special on this in our next video, is we need to talk about brokers because some of them are starting to limit leverage. Is that something we need to be worried about? Well, I think they're seeing something on the books that worry them. And of course, they're starting to hedge that off like any good business would. So we need to cover it, and we will talk about it soon. Speaking of which, $140 billion, of course, was injected into the markets, mostly by retail traders actually post-election. And we can tell that by the fact that household allocation to stocks has gone ballistic, especially over the last couple of months, with people really participating. We're now at an all-time high in terms of how many people are now in these markets. And that means even less sophisticated investors are coming in right near the tippity tops. Now, as we know, most bull markets tend to last around 100%. We're in the 70s at this stage, so we've got potentially 20 to 30% left on this particular run before something kind of nasty happens. And of course, we will be following this story into 2025 because as you'll see soon, there is one particular sector that's starting to look a little bit nasty, and we'll discuss it in a moment. What about value though? Well, value stocks have sucked. Frankly, their ratio is really bad. In fact, it's the worst ratio since the 2000s before, of course, the dot-com bubble crash. We've also seen this when you look at staples. XLP versus SPY, which we covered on our weekend video, is showing a very similar thing. If you've been defensive over the last 2 years, it truly hasn't paid. But are we about to approach this critical zone and potentially turn the corner? These charts will matter in 25, and of course, we'll be looking for the market to turn more defensive which at this stage it certainly hasn't. In terms of most people's forecasts, everyone's looking at the Russell. We've discussed it together again. And right now, we're just not seeing it. We're not seeing the Russell go ballistic. Of course, it did have a very good recovery over the last 3 months, outperforming most of the rest of the markets. But now we've seen the NASDAQ lead again. So is that a bad sign? Well, we'll talk about that in a moment, but let's go through to China for a moment here. It looks like there's an increased activity in China. Now, as you guys know, we've been bullish China over 2024. We've had some amazing runs. Recently, we saw some stimulus come in, and then, of course, it's sold straight back off to the demand. We'll look at the chart soon, but as you can see here, the increased amount of transactions that have gone through since the first stimulus shows us that there is probably accumulation base, which is going to be very strong leading into 2025, as effectively the PBOC has shown its hand. It is the PBOC versus the market. And every single time the market will crack it, and then the PBOC is going to come through and announce more stimulus. You watch them go into 25. Another thing you'll be looking for is weak US dollar leading into 25. If that happens, it could be very good for the Chinese stock market. What about Bitcoin? Still looking good. Obviously, Bitcoin leading at the moment versus Ethereum. Not by much, but it's still doing pretty well. And as we suspected in October, we were kind of looking for Bitcoin to continue its bull run. And for now, we don't see crypto failing just yet. A lot of people are starting to worry about it as well. And as you guys know, the wall of worry is a big deal. So heaps of people in our live stream were talking about how they think Bitcoin's topped off. I'm not sure we think that Bitcoin's topped off. Obviously, our base case was 120, 130K, and our top case at the moment is 200K. I don't think it's going to get over that number, but that's probably top. 150 seems more likely at this stage. Will we see Ethereum and the large caps break out and therefore bring alt season? Yes, January, February, these types of months tend to bring it through. As you guys can see here, Ethereum tends to do better in Jan, Feb, March, April, and May. And this is usually when you see a breakout. And of course, we've got the ratio that we've been looking at, Ethereum versus Bitcoin. And we've got the alert, and you'll see the alert very soon if you haven't seen it yet. Set that one, because that probably, along with 4100 for ETH, could be a really good sign that alts are starting to fire up. What about dark pool liquidity? What about large trades? Well, we are still seeing signs of a sideways market in the S&P. In fact, the Dow, as you can see in a moment, it's actually kind of almost down over the last 30 days versus the S&P, which is middling, and the NASDAQ, which is, of course, leading. Now, look at this. The third and the largest transaction over the last 2 years have just gone through the S&P 500. Could that be Wall Street selling into us? Well, it looks like Wall Street are doing a couple of different things. Number one, they've been buying semis, which we've seen several times. However, they haven't been buying NVIDIA, which we need to talk about. And we've seen, generally speaking, a lot of transactions coming through these squeeze stocks. Now, we mentioned on our weekend video, and of course, Tesla has put on about 7% since then, that someone placed a massive transaction on Tesla longs. Now, you might initially think, well, clearly it's a buy. I still think it's an early sell for Tesla. So what tends to happen is when you see a sweep like this, it can be for a very quick move to the upside. So that's possible. But I tend to find that when you see this coupled with a few others that I'm sure will come through over the next couple of days, and we'll update you when it does, usually means that Wall Street is starting to sell into these rallies. Let's be real, Tesla is disconnected from fundamentals unless you're a really big bull. But that doesn't matter, as we've mentioned since the election. This is a bull run that is being squeezed through options. And as we'll look at, 500 could be the target very, very soon. Let's move over to the last 5 days. What are the best performers? Do we see worries in the markets? Firstly, semiconductors is number one, thanks to Broadcom. Yeah, this is actually a really good sign for markets into 2025. Consumer discretionary ahead of retail sales. As we saw, Black Friday numbers were bonkers. Financials are still doing well. We don't see these sectors usually performing like they have been if we're in a sick market. So the market is still quite bullish. But take a look at the breadth difference here. If you've been in the Dow Jones, only up 0.63 over the last month. If you've been in the NASDAQ, 8.35%, which is just a phenomenal 30 days. And the S&P 500, 3.47. So again, the broader market looks a lot different to, of course, just the small or the big stocks that are very concentrated. The S&P 500 has been stuck. We know that 6,100 is the call wall. We know also that if we are to pull back, in general, we're looking at a couple of levels. 59.50 in particular, which is the 50-day moving average. And even this level here, which is around 6,000, is probably going to act as a level of support and dynamic support. And the reason why is simple. It's options. 6,100 is the core wall. We get above this, we probably push towards 62. Our kind of target for the end of the year was 6,250. So we'll see whether we can still get that. And you can see here the 6,100 level is still just a huge barrier for this market, kind of like 6K was. But have a look at this. We see even a sign of weakness. Everyone stacks on puts. 6K is now the put wall. So it just seems incredibly unlikely that the market is going to even want to push below here. And this is why we continue to maintain bullish exposure to the markets at this stage, even though people are absolutely freaking out about breadth. Remember, breadth tends to be really bad into a bull run because we see everyone concentrate on the sector that matters. In this case, it's semiconductors and big tech. And then usually it goes through the rest of the market. Now, that's what's happened, of course, so far. At the moment, we're seeing semiconductors improve. We have been talking about this for a week and a bit. But yeah, worryingly, NVIDIA looks a little bit different. Let's talk about Tesla. Yes, okay, calls everywhere. 440 broken through. That call wall was smashed. Positive gamma flowing at this stage. Totally detached. This thing's on a rocket ship. And when you're on a rocket ship, you don't usually want to gamble up here. If you're on it and you've been on it for a little while, congratulations. What a run. Could you get 500? Yeah, I think it could happen. Look at this call wall. 500, 500. Now, would I go just before 500? Yeah, I would probably take off. This is the thing though. With a market that's like this, with Tesla going as crazy ballistic as it is, you can leave on if you want to and then start descaling your position. But what you'll be looking for is a huge sell, huge transactions. We've seen number one, so one big transaction. We're looking for a few others. We're looking for Wall Street's hand in all of this business. They will eventually sell portions, and I think they've already started, but at the same time, this thing is absolutely juicing. So whenever you're looking at these markets, you've got to say, am I willing to take the risk? Remember, in one day, Tesla will probably sell 10% at some point soon. So you've got to remember, you're riding the train. It's detached. Let's be real. It's completely detached. And this stock is going ballistic. And this really shows you that the FOMO is real in these markets. What is it driven by? Options, but more importantly, I think it's leveraged products. 2 times leveraged ETFs, 3 times leveraged ETFs, and just generally people taking massive leverage on these positions through options is causing, of course, this stacking flow. And this reminds us a lot of 2021. So if you've never been around these markets before, if you weren't through 2021, you may not be aware of how FOMO-licious these markets can become. Remember, back then, stocks were trading at 1,000 times earnings, and people thought it was glorious. So yeah, did that work out well? No, of course it never does. But you can ride them till it turns bad, and hopefully we'll be able to spot that. Now, when it comes to NVIDIA, there are some issues, but remember, we've got bases now. We're starting to see put floors 132 current price and 125. So we're starting to see the floors. I know a lot of people are talking head and shoulders, which we'll look at in a moment in terms of the charts, but generally speaking, NVIDIA is still holding. Everyone's super negative on it. That chart has to be the one that everybody is posting everywhere. It's always head and shoulders NVIDIA, head and shoulders NVIDIA. But really, if you were in semis, which is where we saw a lot of transactions as well, they've been doing pretty nice. So it's totally a tale of two markets. Let's have a look at Broadcom, 250 currently. I mean, that's the top in terms of the call wall. But if it gets through there, I mean, this was the gravitation. I probably should have put this on the weekend video. You guys would be able to see it. But it's hard to get into these if you're not already early. So 250, I mean, this is a huge level. I would expect there to be sellers here. But if it pushes 250, I mean, there's going to be a lot of hedging. And you can see it doesn't matter what expiration you're looking at. 250, 240 tend to be the one. Let's move over to the leads on the market right now. The big thing here is the US 10 years dropped up. Obviously, we've got retail sales coming. That's going to be an interesting point. We've seen XLP, SPY, value stocks, defensive stocks, those types of things. They're all down at 2,000 levels, which is a very interesting chart to watch. And really what this is telling you at the moment is it's heavy risk on. So it's been risk on for years. We all know this. But, these are the risk off kind of periods. But this is going to be a great long short to look at in 2025 and possibly one of the most important charts. Another one that's going to be important is home builders continuing to get destroyed. Now, higher for longer yields, even though we're seeing cuts, obviously we may see another cut this week, are taking their toll on home builders. And what was the leader, pretty much one of the strongest sectors to start this bull market, has now started to consolidate. Is this a distribution Will we see home builders break down? It's not an instantaneous sell if they do, but it's certainly a warning shot. And we should be paying a lot of attention to that in 25. We will be. Of course, we'll cover it together. US dollar, guys, nothing. Floating between two zones. We're not sure whether it's bullish or bearish. Of course, trend is currently good. Gold is sitting on demand still. We'll see whether it can find buyers. Chinese market continuing to buy up gold. And silver, as you can see here, no bounce yet. We're looking for 31.15. We get that. It's going to be really nice. US oil broken to the upside in terms of the first kind of signs of life. Don't really like oil trading. I think the geopolitical tensions, drill baby drill, all sorts of things. Big issue here for the oil trade into 25. But anyway, it has broken out. And if we move to Tesla, you can see it's starting to detach from reality. So usually what you're looking for is when it kind of moves around this 22% above the daily 20, you always know when it does that, it usually starts to slow down. I mean, we've seen 25s, 26s. I would say at this stage, it's going to try to angle in at some 490 kind of level. I just think that when you get a squeeze like this, you tend to have massive candles. 1, 2, I'm looking for a massive third. I want a big, big one this week. If that gets, the bigger it gets, the more it's going to explode. So in this case, if you're on the trend, hey, it's totally detached. This is the way Tesla trades. Left-hand side shows you this. Look, when it goes on massive rallies, it tends to explode after going on the massive rallies. And it can do some big numbers. So yeah, can we get 500 or just close to? Well, you guys let us know down below, but I'd say it's very possible. And I wouldn't bet against it. As we've said since the election, do not short Tesla. Yeah, don't do it, guys. It's dangerous. If you're going to do it, use options, but I wouldn't be doing it. Semiconductors, the replication setup that we usually use from our day trading masterclass, so far so good. Obviously looking pretty nice. We're starting to see some of these semis lead again. We've had, of course, those large transactions through a couple of Soxal, etc. But NVIDIA is kind of the classic case against this story, which is the left shoulder, head, right shoulder. Now, most people are kind of labeling it up and saying, oh, we're going to get down here. We've seen 125, which is a random put wall. I find that these head and shoulders, unless we're in a bear market or a real sell market, don't tend to move the full distance. So are we putting pressure on it? Yes, but we've held this little level here. I'm looking for a bull move. I think patience may be the best key here. Would I do the short? Personally, I wouldn't. Everyone wants to do the short. I mean, everyone. I'm seeing on X, I'm seeing on YouTube, I'm seeing even in our private community, a few people have been talking about it. It's not for me, okay? I like to be mostly bullish and less bet. I don't like to sell quality companies, you know what I mean? You sell crap. Sell crap, good times. Sell good, tough. So what we're looking for actually is a 140 break plus. If it actually goes back up and finds bid, this is going to be a trap. I think this is best traded with a trap. We will be looking, we'll be watching, but NVIDIA, if you are to the short, you're probably looking around 119 for the TP zone. As we said, Broadcom has gone ballistic. Again, this stock is well known to do this. Went ballistic a few times. Went ballistic back in June. Obviously consolidated from that point. Went ballistic back in May. Consolidated. If you're on it, cool. This is probably how it's going to end. A form of consolidation after moving like this. So there'll be a lot of options money to be made by the street. What about the Hong Kong 50, the HSI? As you can see here, guys, it hasn't found a bid. We are looking for a secondary bid. Are we worried? No. Are we still looking at it in terms of, medium to longer term? That is months and months and months. At this stage, yes. And of course, we're looking for a bid. We'll update when that happens. If we move over to the US 2K, little finder, like someone basically bought a little bit off this 50. We don't have enough news that the Russell is going ballistic yet. And of course, the NASDAQ is very bullish. So this is continuing up and starting to, get into that kind of, I think it's a little bit overboard area, but we remain bullish at this stage because really you've got to, the data, the stats, the 3-month stats we bought up 2 months ago, everything just kind of points towards still this market kind of climbing the wall of worry. And a lot of people are getting concerned because I'm seeing more bearish action than usual. When we get our sentiment survey results this week, that will tell us a lot. Now, has Ethereum shown us that alt season is on yet? No. Okay, ETH-BTC still not broken above this 0.04 barrier. I think it's a very important point to be looking at. And of course, Ethereum above 41.14 didn't trigger. Look how close it got to triggering. So if it triggers above that level, we could be looking at a nice movement from Ethereum here up to 4.6. I'm really liking this. As we've mentioned, we love the current price action on Ethereum. It looks really excellent. Bitcoin, of course, has also looked good. Oh, there's Microsoft that's breaking to the upside at the moment. But let's have a look here at Bitcoin. So you can see here, Bitcoin, this is a dull market, and dull markets tend to really lead into expensive rallies for the shorts. So I wouldn't be shorting Bitcoin under any circumstances. I think this thing is trying to push a 120. We'll see whether it can get there. Obviously, at the moment, the price action is still bullish, and the daily 20 on both these charts, daily 20 also on Ethereum, as you can see here, acting as very good buy pressure like we spoke about last week. When it comes to this week's news, really core retail sales, we expect it to be pretty good. And then we move through the Jerome Powell annoying us, and Jerome Powell is expected to cut 25 basis points. I wouldn't go against that. I think it's probably where it's going to be. As we know, the press conference can push the markets, so you've got to worry about the half an hour afterwards. Sometimes that can reverse things. Really, it's going to be about options. A lot of options expiration this week, so we'll be watching that later on to this week. GDP, don't worry about too much. And the rest of the stuff here, core PCE, often used by the Fed as well to look at these inflation numbers. So really, at this point, there's quite a lot of news. This is really the last big major news that we need to look at for 2024. And so far, the markets remain bullish. As always, guys, if you enjoyed today's video, please remember to subscribe. In summary, I think at the moment we're seeing bullishness across markets. We're seeing, of course, a concentrated lead led by big tech and semis. That sounds familiar. That's pretty much what we've seen this entire bull market. As long as they're leading, good things generally will happen to the rest of the market through it. We've also seen, of course, Ethereum start to fire. We'll see if we can get through 4,100 and start pushing another 500 on that coin. And really, it might suck if you're not on it, but yeah, and we've been saying it for a while now. These markets are really getting into the froth zone. It's starting to remind us of 2021, 2015, 16 in China, and obviously 2019 as well on the American market. These types of periods, you've got to be very careful. The story, I believe, is in leverage, and we'll be looking at leverage very closely over the next coming months. As I said, some brokers have actually started to lower. What are they seeing that we don't? Thanks so much. Subscribe. We'll see you in the next one. Bye for now, guys.